start with the big picture. Qualifying child and qualifying relative are two different dependency frameworks. On the EA exam, they love tricking you into using the wrong one. Qualifying child has 5 tests, and they're generally stricter. In this lesson, we're only zooming in on the first two, relationship and age. Nail these, and you'll eliminate a lot of answer choices fast. Relationship test. The child must be related to you by blood, marriage, or adoption. That includes your child, stepchild, or adopted child. It also includes siblings. Half-siblings and step-siblings count. And it includes descendants of any of those, like a grandchild, niece, or nephew. If you see niece or nephew, mentally translate it to descendant of sibling, and you're good. Don't forget foster children. A foster child can meet the relationship test even without blood or adoption, as long as the placement is through an authorized agency or court order. On the EA exam, foster child is often the giveaway that relationship is satisfied, so you can move on to the other tests instead of overthinking family trees. Now the age test. A qualifying child is under 19 at year-end, or under 24 at year-end if they're a full-time student, or, this is the big exception, any age if they're permanently and totally disabled at any time during the year. Notice the timing. It's based on age at the end of the tax year, except disability, which ignores age completely. Full-time student is the classic exam twist. The key is that the student rule extends the age limit to under 24, but only if they're full-time. If they're 24 or older at year-end, the student rule doesn't help. Also, remember this is only one test. Even if the age test is met, you still need residency, support, and the other qualifying child rules later. There's also a younger than the taxpayer rule. Generally, the child must be younger than the person claiming them, but disability overrides that. So yes, you can have a qualifying child who is older than you, if they're permanently and totally disabled. That sounds absurd, which is exactly why the exam likes it. If you see disability, don't apply the younger than rule. Quick example. Arnold is 55 and permanently disabled. His sister Crystal is 38, supports him, and he lives with her. Even though Arnold is older, he can still be her qualifying child because disability removes the age limit and the younger than requirement. This is also why dependency rules can affect filing status, like head of household, once the dependent tests are met. Practice question. In the case of a multiple support agreement, a taxpayer must provide more than what percentage of support to claim a dependent? The options include 50%, more than 50%, at least 80%, and 10%. Think about what multiple support is trying to solve and what minimum contribution makes you eligible. The correct answer is 10%. Under the multiple support agreement rules, you can claim a qualifying relative if you provided more than 10% of the person's total support and the other supporters, who together provided more than half, agree not to claim them, typically documented on Form 2120. The tempting wrong answer is more than 50%, because that's the normal support idea, but multiple support is the exception. Practice question. Gordon is 65 and lives with his son and daughter-in-law. He's retired with $12,000 of taxable pension income, and he doesn't plan to file a return. Can the son and daughter-in-law claim Gordon as a dependent? The choices include yes, no, because income exceeds the threshold. Yes, if Gordon doesn't file, or none of the above. Think about which dependency framework applies. The correct answer is no, because his income exceeds the gross income threshold for a qualifying relative. Gordon is not a qualifying child at age 65, so you're in qualifying relative territory, where gross income must be below the limit. The tempting wrong choice is yes, if he doesn't file, but whether he files doesn't fix the gross income test when his taxable pension is that high.